how to trade momentum and stock volumes like a pro. How to trade momentum and stock volumes like a pro. We are on a monthly chart of Activision Blizzard Incorporation. This is a Nasdaq 100 component, and we want to discuss how to trade momentum and stock volumes like a pro. All right, so we can see that on this chart, if you check carefully the trading volume, we have here a normal trading volume up to this point. You can see that it's a normal trading volume. The maximum was around 200 million shares being transacted in Activision Blizzard Incorporation, Epic ATVI, Alpha Tango Victor India. Suddenly here we have a surge in trading volume. Pay attention to this arrow here. So we have a surge in trading volume from 200 million shares. We have nearly 300 million shares. So we have here a surge in trading volume. After the surge in trading volume, we also see a surge in momentum. So because we're on a monthly chart, the price went up from 5 months, non-stop. You see here, okay, that's you can see the red line here. So we have a surge in trading volume followed by a surge in momentum. All right. So how to trade momentum and stock volumes like a pro. What you need to do is to highlight, okay, the high of the bullish momentum. So the bullish momentum has started from here all the way up here. So you will highlight the high of the bullish momentum, the low of the bullish momentum, and also the median line of the midpoint of the bullish, okay, price action. Okay, here it is. Surge in trading volume and also a surge in momentum. So before you can do that, the price has to start going down first. So once you see the price start going down, then you will draw the high, the low, and the median line. You cannot draw this line before the price start going down. The opposite is also true in a downtrend when we see a surge, okay, in trading volume, okay, that is followed by, okay, a surge in bearish momentum. All right. So, for instance, if you are here, all right, so we see a surge in trading volume, and we see straight away that after the surge in trading volume, we have, okay, a surge in bearish momentum. Now, what we need to do, once we see the price start changing direction, rallying up a bit, okay, rallying up a bit, we will start drawing the lines. We draw the high of that bearish price action, and we will draw the low of that bearish price action, and then we will also draw the median line on that bearish price action, because we have a surge in trading volume that is followed by a surge in bearish momentum. Price starts going up a bit, we draw the high, the low, and the median line of that price action. All right. So I want to show you one example here, which is Activision Blizzard Incorporation, a Nasdaq 100, okay, components, all right. And we are on a monthly chart. We see a surge in trading volume followed by a surge in bullish momentum. Price went up from here to here and start going down. Now we draw the high, the low, and the median line. Very often, the smart money is very, very smart, as you know, and they like to buy all the time at 78% Fibonacci retracement level of this price action. So they are the people who bought it first. So you see a surge in trading volume is alerting us that a big market player is active in the financial market. Okay, so now once they bought it this month, okay, you see the price just going up. Okay, now you will see very often after the price went up and it start going down, very often you will see that the price will come back down almost to the 78% Fibonacci retracement level. So this is the line here. If I color it now, okay, into red, okay, that's the 78% Fibonacci retracement level of this price, as the price went up all the way here and then pull back to the 78% level. You will see that very often, but just be aware of that, okay? be aware of it, that very often after this surge in trade volume and, all right, bullish progression, the smart money usually will bring the price back to the 78% Fibonacci, okay, extension level. But that's not what I want to share with you today. What I want you to do is to highlight the median line, and you want to look for an opportunity to buy in the zone between the 50% and the 61.8% Fibonacci, okay, extension level. So these two lines, the top one is the 50% Fibonacci retracement level, and the second one is 61.8% Fibonacci, okay, retracement level. So as we see a surge in trade volume and followed by a surge in bullish momentum, don't rush. That's why I'm saying to you that very often if the price start going down, don't rush. Be very patient. You can combine the Fibonacci retracement, the 50%, 61.8%, with a candlestick pattern. So here we see a surge in trading volume, all right, a bullish price action, pull back into the zone of 50% and 61.8% Fibonacci retracement level, all right? Now you can pay attention to the candlestick bar. So here, if you look at this candlestick, there's a candlestick pattern, these two candlestick bar here. This is bullish candlestick pattern because the first candlestick was bearish, went all the way to the 78% where there were orders to buy, and the smart money bought it again. And this candle have a long tail. The long tail of a bearish candlestick bar is indicating to us this is a support zone. Look at the second candlestick bar, it's a bullish candlestick bar. Price went down a little bit also with a tail, confirming to us that the zone between the 50% and the 61.8% is a support zone. Now, what you need to do after these two candles, the first one is this one, the second one this one, you have a bullish candlestick pattern in the zone of 50% and 61.8% Fibonacci retracement level. Once you see that candlestick pattern, any bullish candlestick pattern in that zone, you will now implement, okay, a top-down trading method. So because we are on a monthly chart, we will combine them. We will use, if you were here, you see this candle is now closed. The two candles are now closed. We see it now that we have a surge in trade volume, a surge in bullish momentum. Now price pull back into the zone of 50% Fibonacci retracement level. Now we have a bullish candlestick pattern in that zone. Those two candles must close first, okay, because we're on a monthly chart. We want those two candles to close. If we're on a weekly chart, the same strategy is true on a weekly chart, daily chart. But if you're on a daily chart, be careful. All right, daily chart is quite distorted most of the time, and I try to stay away from it. Now, if you're on a daily chart, all right, the same thing, the same rule we're going to apply, all right, the candlestick on that time frame where you are looking for a trading setup must close, right, must close. And once it's completed, now you have implement a top-down trading method to trade it. So you're on a monthly chart. The monthly chart is the trading setup, a daily chart for the signal, and the hourly chart for the entry, all right? If you're on a weekly chart, the weekly chart for the trading setup, the 4-hour time frame for the signal, or the 2-hour time frame for the signal, and you go to the 50-minute time frame for the entry. If you're on the 4-hour time frame, all right, the 4-hour time frame will be your trading setup. If you see this on the 4-hour time frame, now the 4-hour time frame will be your trading setup, the 50-minute time frame for the signal, and the 3-minute or 5-minute for the entry. All right, so you see here, candlestick pattern, okay, a bullish progression, a surge in, so we have first a surge in trading volume. Once this candle is completed, you see the first candle here. Now, what we see that the price start going up, you see here, it's just going up, okay? We can day trade during this time, but I don't want to talk about that now because this is a specific, okay, trading method that combines the momentum and the trading volume. So now we see a bullish progression, a price pullback, okay? Generally, one more thing I need to say to traders that one can also look for opportunity to buy near the 78% Fibonacci retracement level, where you can switch to another time frame to zoom into the price action in the zone of 78% Fibonacci retracement level. Okay, all right, it makes sense. It is also powerful. If the price start going up, your first bullish target is the high here, this high here. All right, it's this high here. All right, it makes sense. All right. Is this high here, okay? Now, another example that I have here I want to share with you is another stock, also a NASDAQ 100 component, the APX Alpha L. That's American Airlines Group Incorporation. Okay, one more time we have here, I have my things ready here, a normal trading volume. All right, now we have a surge in trading volume. So you can see that a normal trading volume is the average of 300,000, okay, a million share being transacted. Suddenly we see this surge in trading volume. Pay attention to this arrow here, okay, bringing the trading volume to 474, call it almost 500 million share. So from 300 million share average volume, we went up quickly to almost 500 million share. This is telling us that, okay, a big market player is active in this stock. So this is this month, within 1 month, okay, within 1 month, we went from 300 million share to 500 million share. You must be crazy if you are a stock trader and you don't understand those things, because it's so important to know what the smart money is up to, so you may follow them. You don't want to step on their feet. You want to just follow them gently, all right, so you can also take your portion. All right. So now we see a surge in trading volume, alerting that something is going on with this stock. What you need to do, practically, you need to check the economy news related to, okay, American Airlines Group. Why suddenly, okay, the smart money is so interested in this stock? Check the fundamental, perform at least Google Asset test, okay, bit of fundamental analysis. No, it is not all about technical trading alone, all right? Once you have completed your verifications, all right, now you see a bullish momentum is now developing here. So here, see here, so you will highlight a low. Once you see the price start going down, okay, probably after this candle here, you see here, it went down a bit and then went up. So probably after this candle, it become clear to you that now it start going down. So you highlight the high of the bullish price action, the low of the bullish price action, and the median line. So once again, you see here again, we see this time here, the price went again to the 78%. Look what the smart man is doing all the time. Can you see? Let me color it now into pink so you can get it right. You see now? One more time, after the surge in trading volume, price went up, start going down, they bring it back to 78%. But here, they bought it again. But look, the price went up a bit. This is what does. This is the reason why I'm saying to you that you must use a top-down trading method. Look, the price went up a bit, but couldn't go back to the first high here, but only to come back down. But there is something else that can help you. So if you are using a top-down trading method here, you will see that it was bullish first, and then it's becoming bearish. Okay? But I want to draw your attention to this candlestick bar here, this one. Hold on, please. Okay, so now again we have a normal, you see in this session here, follow my cursor, we have again a normal trading volume, average volume around 300 million shares. Once again, look at this candlestick bar, another surge in trading volume. So you can see that those who bought it here came out here. Those, you have to know how to analyze the trading volume. So those smart money who bought it here, they came out from this candlestick bar. So we have again a normal trading volume, this time again a surge in trading volume. If I draw a vertical line on my chart to highlight this particular surge in trading volume, it's this candlestick bar here. After that, you see, it was a bullish candlestick bar, but after that, the price just went down all the way to 78% Fibonacci retracement level, try to go up a bit, and then now it's going down. And these, you can see that they bought it first time, and now they changed their mind, and they are now selling it, and the price below the 78% Fibonacci retracement level. But all in all what you are looking for, this is a good example to tell you that it doesn't always work as we will expect it. So you will have highlighted the 50%, the 61.8%, and you know also that the price has a high chance to go to the 78% level. So you can buy here at 78% using the top-down trading method, and you will look for candlestick pattern in the zone. There's one here. You see these two candlesticks. It's a bullish candlestick pattern. The first one, you can see the price went up, okay, but closed a little bit bearish, went down all the way here. Again, the tail, followed by a doji, all right? In the doji, you see these two candlesticks. If I remove this line now, the 61.8, these two candlesticks, a lot of indecision in the zone, all right? And now, suddenly, we have a bullish candlestick for 1 month here. So once again, if you apply this method carefully using the top down trend method, you will see that, okay, you will be catching a nice profit before it is too late. It went up a bit before, okay, they sold it back down. Use the top down trading method. If the signal fails, come up. So what we are looking for, we have first a normal trading volume, a surge in trading volume, significant surge, increase in surge trading volume. Now, after the surge in trading volume, we see, okay, a surge also in a bullish momentum or bearish momentum. Now we wait for the price to start changing direction to pull back a bit. Now we'll highlight the high, the low, and the median line of that bullish price action. All right, we want to look for an opportunity to buy in the zone of 50% and 61.8% Fibonacci retracement level using candlestick bar in that zone. Remember that very often after the surge in the volume and the surge in the momentum, if the price starts pulling back, there's a high chance that the price will go all the way to 78% Fibonacci retracement level before it will start changing direction. All right. As you can see here, you pay attention to the surge in trading volume. If you see a surge in trading volume, and then you see another after this surge in trading volume, look carefully. Now we have another surge in trading volume. Try to re-examine what has changed. Why again we have a surge in trading volume? Are they buying for the second time? Well, if they are buying for the second time, you will see that the price will start displaying high lows, high. But here it is, after we see another surge in trading volume, the price is going down big time. So price are going down first, and now we see a surge in trading volume. But the price did not continue to go up. I will be a little bit worried about the first surge, and now I would think that these people are coming out of their trade, all right, before it is too late. So I will be cautiously buying in this zone, keeping my eyes on the ball before, okay, it is too late, all right? It makes sense? This is about how to trade momentum and stock volumes like a pro. If you have any question, ask your specific question in the comment section. Have any suggestion, put in the comment section, and in due course, I will record another video to answer your specific question. All in all, my friend, this is about a technical trading setup. A normal volume was in place. Now we see a surge in trading volume, alerting us that, okay, there is an increase of interest in this particular stock, all right? Now we see that a bullish momentum follow that, okay, surge in trading volume. Well, it looks to us that they are buying, okay? So if people are buying, we are waiting for a pullback, all right? Very important to a pullback. A pullback in a zone of 50%, 61.8%. We now implement a top-down trading method to trade it. Remember that the price can go down all the way to 78% Fibonacci retracement level before, okay, a change in direction. Always combine the technical analysis with the fundamental so you may understand exactly what is taking place. If you see a surge in trading volume and then the price went up, now you see another surge, try to re-examine your trading setup so you may understand exactly what is taking place. Though I have been giving you here a bullish trading setup, the same thing is true in a downtrend. When we see a surge in trading volume followed by a bearish progression, we'll highlight the high, the low, and the median line of that bearish price action, and we will be looking for an opportunity to sell between the 50% and 61.8% Fibonacci retracement level of that bearish action. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, talking about how to trade momentum and stock volumes like a pro.